Hello, everyone. Welcome to BT Talks for another episode. This is episode 27, and I have the pleasure of having as a guest Ceci Hassan. She is a tax attorney. There she is. Now she just joins. Ceci Hassan is based in Miami. She's an incredible tax lawyer. She worked with Baker McKenzie for many years, and now she started her own practice. And we're going to discuss about tax efficiency, the advantages of living in Florida compared to high state taxes. So here she is. Bear with me 1 second. Benedict, thank you so much for always participating. Hello. Can you see me? Can you hear me? Okay, seems there's a little issue with can you hear me? Seems we have okay, I think now we're good. Yes, the image is a little bit blurred, but that's okay. It's part of it. I always like to say these live talks are not always perfect with the images and the sound. We have to get used to it. It'll be better and better. But thank you so much for joining me on my VT Talks. So today it's a special episode. Please introduce yourself, because a lot of people may not know who you are, what you're doing, and I think you're doing a lot of great things, and you can advise everyone on tax efficiency. And the benefits of living in Florida.
Sure. Thank you, Benjamin, for including me today. And I hope you guys can hear me okay. My name is Ceci Hassan, and I was with Baker McKenzie for many years, one of the largest global law firms. And recently I left to open up my own law firm, Hassan International Law. And I help private clients with their international tax planning. A lot of that, which includes foreigners who want to purchase real estate in the United States. Maybe they want a beach apartment in Miami. And if you follow Benjamin, you see he posts many gorgeous apartments in Miami Beach. And I have a lot of clients interested in purchasing units like that. Well, I help them set up structures so that they can own this real estate in a tax efficient manner in the US. And I also work with them and their advisors in their home country to make sure that the ownership is also tax efficient for wherever they may be living in the world.
There you go. So just a quick question before we get into all this. How did you get into this business? How did you did you always want to become a lawyer? Did it come naturally, or how did you get started?
Yeah, so that's an interesting question. I knew I wanted to go to law school, mostly because I didn't know what I wanted to do. And then when I was in law school, I took a couple of tax courses, and one of my professors told me that I needed to apply for a tax LLM, which is basically a master's that you get after you go to law school, specializing in tax law. And taxes kind of always made sense to me. I know that sounds weird, but if you like logic puzzles or logic games, that's kind of what tax law is. It's just a logic puzzle. And I really enjoy this aspect of the tax law because I get to work with people all over the world, and interesting people like Benjamin, who told me just a few minutes ago about that he's lived all over globally. So I really enjoy working with the people and these global people and learning about, their cultures and where they're from and how things work in their home country. So that's kind of how I just got into it.
We're in different sides of the business, but we're connected, and I think we work with passion. There's no other way. I always say you have to do everything with passion. It can be very hard. Any business is difficult, but if you do it with passion, you'll do very well. And obviously, you have to love people. I believe in our business before even the business you're doing. I think the people is the main aspect. Understanding their needs, their wants, explaining to them different things, different scenarios, how things work, and all of that. So, and also real estate is pretty big industry. So my role is also to connect my clients, with tax attorneys, with architects, with interior designers, and with the best and right people. And I believe that every client, there is a fit for someone. It's not just one person because that person is very good. It's also, I think you have to feel for the personality. You're like, oh, okay, I know this person. I'm going to connect you with Ceci because I think she'll be the right fit. They meet, and then, that's it. Something happens. So now let's get into the talking about taxes. So can you talk to us about, the advantages of living in Florida compared to high state taxes? That's number one, and then we'll go into separate, different questions. But I think it's good. We see a lot of press about it, but I want to highlight the main points about, living in Florida versus other states on a tax level.
Sure. So Florida is very popular because we have no personal income tax. So that means I live in Florida. I do not pay any income tax to the state of Florida for money that I earn, or if I were to sell real estate, there's no money that I would pay to Florida as a tax. That is not that's not true in New York. New York has state tax. If you live in the city, they have a city tax. If you have real estate, there's transfer taxes. They even have their own estate tax and inheritance tax. So we don't have any of that in Florida, whereas New York does. So for that reason, a lot of people prefer to make their residence, they prefer to be a Florida resident over a New York resident.
Yeah. And I was looking, I think, I forgot which website it was, but there's something that came out, which was a very interesting map of the U.S. And showing all like the different states of the U.S. and how they rate, and Florida actually came out as number one, with other states. Interestingly, I think there was the state of Alaska for some reason, but going to live in Alaska, I don't know. I'm sure it's a beautiful country, but it was interesting, and it was rating, obviously all the different states from New York to California, and unfortunately, I mean, these states, New York and California, Illinois, are high state taxes, and it's getting worse and worse. And they're great places, but it's penalizing, I think, people at every level, whether they're doing well or extremely well, and that's why people are deciding to go in other states. And I think Texas is also very popular,
Yes.
but I believe Florida is more appealing.
Absolutely.
So how does it work, if someone wants to buy a property as an investment in Florida, and if they're a national or if they're a foreigner?
Sure. So, I mostly focus with foreign persons, but just so that there's a comparison, I'm an American. So if I wanted to buy an investment property, I could buy the property in my own name or under a company structure. And really, my income tax situation would be the same. I have to pay income taxes no matter what. And also with my estate tax situation, there's no way for me to buy an investment property in the U.S. and not have to pay estate taxes or gift taxes. When there's a foreigner who wants to acquire, because the property is already located in the U.S. has what they call primary taxing jurisdiction. The property is located here. So if they sell the property or if they rent the property, the person will have to pay the income taxes. But the biggest difference is that with foreigners, we can put a structure in place where they won't have to pay estate taxes should something happen to them while they own this property. Because foreigners, should they own property in the U.S., our government gives them a $60,000 exemption. Everything in excess of that $60,000 exemption could be subject to estate taxes up to a rate of 40% currently. That could all change. We have a new president-elect who's coming in, and he has that as one of his objectives to change how our estate tax system works. But, Benjamin will tell you, if you buy an apartment, condo in Miami Beach, maybe $1 million or $2 million, the estate taxes at 40% could add up very quickly.
For sure. And how would it work as a primary or secondary residence? Not buying as an investment property, but more as a main residence, because there's things to know as well, like how much time you're going to spend here, how much money you're going to spend. all these different things. So can you tell us a little bit about that?
Yeah, absolutely. So when a foreign person wants to buy it, maybe as their second residence and not necessarily for investment or rental, not much is going to change. Our primary objective is going to be to protect the asset from the U.S. estate tax. The way we do that is by establishing a foreign company structure that we call a blocker. We call it a blocker because the foreign company blocks the U.S. estate tax from applying. In that case, whether they're buying it as an investment or as a second home, it's not much is going to change. There are, I just want to mention, many different structures that could be used, and the kind of structure depends on the value of the property, what kind of property versus, maybe you're buying an apartment in Miami Beach as a second home, or you want to invest in entire buildings. So there would be a difference there. But for this purpose, it's going to be the estate tax protection. And basically, second home or investment property, as Benjamin is saying, it's going to be the estate tax protection, but for all these purposes, we are going to treat it the same under the structure as an investment. So,
good.
Yeah. I mean, I just want to say basically what I mean is, like, if you have a property and it's owned by an offshore company, but you pay the bills from your own name and use the property whenever you want, and there's no agreements in place, the IRS is going to say, look, you're not even respecting the company, so why should we? And there's a risk that the estate tax can apply. So it's more than just having a company, it's making sure you treat the company as a separate entity.
It's very important. I think you have to, something I always say is, when you live in a country or have property in a certain country, you have to respect the rules. You can't really go around. You have to understand how it works. That's also where you come in and you can really advise. Here's my good friend Chris Balshaw, who just joined from I don't know if he's in Dubai right now. I think he's in the UK or Scotland, but he worked in Dubai for a long time, so Dubai is tax free.
Nice.
Dubai is a nice place. I'll definitely come to Dubai soon, 2021. But I know there's advantages in Dubai. But again, in the US, you want to stay in the US because there's a lot of advantages being here as well. Chris is in London. There's a lot of advantages of being still in the US. Florida, I think, is a great choice. And as you can see, the city of Miami, South Florida is changing a lot, and there's actually a lot of companies that are moving down here. There's a lot of startups that are moving, down here. So that's a lot of people that are moving, not only just families. The infrastructure is getting better and better. It's not, Florida is not what it used to be, 10 years ago. It changed a lot. So people are making Florida as a primary residence for tax reasons, because you can save a lot of money. I saw some numbers that, make complete sense. I don't know if you make $100,000, how much you can save, or if you make $1 million, how much you can save in a high state tax versus, say Florida. So there's a lot of benefits. Thank you, Chris, for all your comments. Appreciate it. If you have any questions, please put it in the comment box. I know you have some great ones. But let's talk now about, so now, Joe Biden should be our president. It's not done. I mean, I think, he's pretty much our president, but, some people will say, it's not over, but I think, it's fine. So as Joe Biden, our new president, what is there any changes? Is there anything to know about taxes in Florida, but in the US, generally speaking?
Yeah, I mean, he's proposing a number of different tax changes that he released earlier this fall, and who knows which ones are going to pass, because it seems like our Congress will remain Republican. But given all this money that we have just, spent on all of these stimulus packages for corona relief, our country needs money. So one of the easiest ones to target is going to be, number one, our corporate tax rate. Trump lowered our corporate tax rate to 21%. Joe Biden has it on his list to raise it, I think, 28%. So that could be changing, that could be coming through. Another easy one is our estate tax. Our estate tax credit, if you're an American, right now is at roughly $11.6 million. So I can pass away with $11.6 million and not pay any estate tax. I mentioned before, for foreigners, it's $60,000. But what Joe Biden is suggesting is possibly lowering that $11.6 million down to 3 million, 3.5 million.
Yeah.
And the other thing he wants to do that we currently have, it's a great benefit. So we have what's called a step up in basis. So if someone passes away owning property, the property receives a step up in basis. So what does that mean?
Okay, interesting. Yeah.
Yeah, I mean, a simple example I always give is you buy 100 shares of Apple for $100. And at the time that $1,000. If you were to sell those shares, you have $900 of gain and you would pay tax on that. But because we have the step up in basis, the basis is increased to $1,000. So should your heirs receive it and sell it, maybe all that gain has been wiped out. That's one of the things that Biden is talking about getting rid of. In other countries like Canada, they'll charge capital gains at death. You know, so there's different proposals that are being, that he's mentioned, and who knows what it's going to look like. But right now we have a very good deal, so plan now. While we have
do you think by having Joe Biden as our new president, a lot of people are going to move down south?
I mean, that's a possibility. He's going to be changing a lot of the federal stuff. Some of the states, like California, are already proposing higher tax rates. Like California is raising their state tax from roughly 13% to 16%. And then they want to have what's called a wealth tax, which is basically like they'll charge a certain percentage over the value of all your assets. And that would be the first state to do that. And then, you know, I wouldn't be surprised if other states would start to follow the lead. So you might see a lot more migrations to like Florida and Texas, you know, but you know, I think that's actually already happening too with this coronavirus. I saw a lot of people are moving to Florida, like Florida.
I think I saw something, I don't know the exact number, but there's, you know, it's been, I think over the past year or so, there's been close to 1,000 people a day that are moving to Florida. So that's you know, that's a big number. So obviously there's, you know, the tax reasons, but also when it comes to the lifestyle reason. I mean, you know, you're from here. You lived and studied in different places, but you came back here. And I think, you know, the lifestyle element is also a very important one to put out there because, you know, the quality of life here is exceptional. I believe, you know, by having lived in many places, and it's very hard after to kind of leave, you know, Miami and South Florida because you're so much used to not just the weather, but the atmosphere. I think there's a lot of things that are very good. What are your favorite things to do, you know, in Miami, South Florida? Do you have any things you do outside of work and I guess family, but that you love in Miami or South Florida?
Yeah, so we actually have a place in Key Largo. So going to Key Largo, going on the boat is one of my favorite things. It's like 45 minutes from Miami. So it feels like you're on vacation just from 45 minutes away. And if you ever get a chance to do it, the Florida Keys are a part of the Caribbean. So you have that like bright blue, bright green water that you also see. It's just gorgeous. So I love to do that. And then my kids play soccer. So when I'm not in Key Largo, I'm at soccer.
That's you know, actually one of my favorite things. I'm very connected to the ocean, to the nature, to water, and being on the water, close to water, is for me something that I can't live without.
Yeah, me too. I love it.
So Ceci, thank you so much for taking the time to have this conversation. For anybody who joined, thank you so much. If you didn't join, you'll be able to watch it again. It'll be on my feed. And if you want the presentation of, you know, so you can, you know, get a read of the differences between, you know, New York, say, and South Florida tax-wise with details, just DM me, or, you know, I'll put Ceci's contact information. If you need any advice on anything tax-related, you can reach out to her directly. She's more active on LinkedIn, and she's more reachable by email or phone, so I'll put all her information. But she's fantastic. She'll be able to advise you. I'll send everybody the presentation if they want it, because it's worth seeing. And thanks again for everybody who joined. Chris, thank you so much for being very engaging in this. I appreciate it. We'll have to do a live with you and Ben soon, so take note, please. All All right, Ceci,
Thank
thank you so much, and have a great day. Thank you.
you. Bye. Thank you.
Bye.